Hey folks, well, what a day. Canopy growth lifted the whole sector, something that I'm pretty sure everybody on the planet didn't expect them to do, but we'll take it. We'll go through their Q1 2026 earnings review. Spoiler alert, they did beat estimates. We're going to take a look at the chart toward the end as well, what to expect in terms of the technicals and the price action in the days, weeks, months ahead. I will give my thoughts and opinions, but as always, that is all it is. It's not financial advice. This is for entertainment purposes only. And you can like the video, subscribe, tick the bell. You'll be notified on any future videos or when I go live. And full disclosure, I do own Canopy in my portfolio, a very small position, but a position nonetheless. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And ignore my ambulance mimicking dog in the background. So these were the analyst estimates. I added them all up, got a consensus on Wall Street when I did the earnings prep video. So we were expecting 64.73 rounded Canadian for revenue, and that's million, and negative 0.217 for EPS. And they actually beat. It came in at 72.13 million, which was great to see, finally getting on a positive trajectory there and quarterly growth. And then in terms of EPS, it came in at negative 0.22. And we were expecting negative 0.231. So that was a very big beat in terms of what we were expecting on TradingView. But in terms of adding up all of the analyst estimates, like I said in this video, I go through all of them. Sometimes there's like 10 or 12. And as you can see here, it was actually a slight miss in terms of what I was looking at. But the big revenue beat was the main driver here, in my opinion. And we'll just go through some of the highlights. So they had 24% year-over-year revenue increase. So and it had to do with adult use MJ. So their Q1 2026 net revenue increased 43% year-over-year, benefiting from increased distribution and strong consumer demand for new products, including the Claiborne infused pre-rolls. Company achieved 17 million and planned 20 million in annualized savings since March 1st, 2025. And SG&A, sales, general, and administrative expenses down 21% year-over-year in Q1 fiscal 2026 compared to Q1 fiscal 2025. So we'll go through some of the highlights. The margins were really bad, still only at 25% gross margin, which if you look at SNDL, it's got higher margin. I think it's like 27%, and they're into retail, and they're in the value retail segment. And a producer, it's somewhere around, like, the average for producers probably around 40 or 50, and that's considered good. So this is still abysmal. That has to come up ASAP. And they've still been kind of right-sizing the ship, getting rid of, products that aren't profitable, etc. So I expect that to come up. But honestly, I'm not expecting any major profitability metrics, positive EPS or free cash flow or anything like that. I can't see any of that happening for at least a couple of years. But as I mentioned, the crown jewel, sort of the stores in Bickle, international revenue as well. Cash and short-term investments increased to 144 million as of June 30th, 2025. And that was up from 131 million at March 31st of this year. So we'll go through a little bit quicker here. Just want to see where it talked about Canada Medical right here. Net revenue in Q1 fiscal year 2026 increased 13%. And international markets MJ net revenue was 9 million in Q1 fiscal year 2026, representing an increase of 4% over Q1 fiscal year 2025, primarily attributed to increased shipments in flower products in Europe, which was offset by the decline in the company's Australian medical MJ business. So they go through some highlights for stores in Bickle. And in terms of excise taxes, they paid 16.6 million out of their top line revenue of 88 and change million. So the net revenue 72.134 million. But again, still very high in excise taxes, right? That's why a lot of these companies are starting to focus on the international markets as well. But we'll go through some of the highlights here from Benzinga. And one thing I've noticed about Benzinga is every single article on their main page now is a Canadian LP. That's really the focus. And it seems like every second article is about Tilray, and then they had Aurora, and now Canopy Growth. But it's almost like they don't even care about MSOs anymore. It's like MSO gang who, right? So, in my opinion, rightly so. Look what happened to AYR. I was screaming from the rooftops about that. We have to learn what we learned in Canada, and a lot of this, it's very reminiscent of what's going on in the US right now. And yeah, even when these Canadian LPs and producers start to expand internationally, they have to be cognizant of the lessons that they learned in Canada. You don't want to oversupply, right? You want to manage your supply and your operations as you grow and kind of keep up with demand. You don't want to, over promise and under deliver. So I think that's going to be a big focus going forward as well. But they said, adult use MJ boom powers Canopy gross sales, but wider loss hits margins. So yeah, that was a terrible margin print. So that has to come up for sure. But yeah, they go through some highlights. If you want to check into this full article, I recommend that you do. But yeah, look, most people have probably already read the earnings anyway, so I'm not going to sit here and regurgitate everything in the article. I wanted to just kind of give my thoughts and opinions on the highlights, mention that they beat in terms of the analyst estimates, and we'll take a look at the chart here as well. So we'll take a look at CGC on the NASDAQ. We had this pennant that broke bullish here, and we knew we had key resistance at 138, and that's the weekly bear flag. And look what happened. We hit 143, but in my opinion, that's a little bit of a red flag because we closed back below it. And at this point, we could still see this follow through. And the target is 87 cents. All about key support there, though, at $1 psychological. If we lose that, then you have all sorts of things start to come back into play, right? Like the reverse split fears. Could they do another reverse split? They already did a 1 for 10. Could they end up doing another one? So those are all the things that could potentially come up. Fear, uncertainty, and doubt, FUD, as we potentially head down back towards that dollar mark. But I'm still a little skeptical because I still think it's going to be a couple months before we see any meaningful reform in terms of rescheduling or banking push. I just can't see safer banking or rescheduling happening, right away, especially with crypto still in front and center stage. They got the Genius Act, now they're working on market structure, so that's going to be, dominating headlines and dominating politics and Congress for the next little bit. So they're expecting that to be done by September and maybe October. So it could even happen in August. I don't think so. I think it's most likely in September. But by then, they'll start to pivot over to MJ, in my opinion, and then we could see reform, and then also, the new DEA head, Terrence Scholes, just getting his feet wet, just getting caught up to speed. So again, I think it makes sense that it's going to be another few weeks or a couple of months, and that lines up well with my thinking. But at this point, we're more than likely just going to see a daily inside bar into tomorrow. Key support is going to be the low of the day at 110 and then $1, and then key resistance, like I said, is that 138 and then 143. Get above that, we've got a lack of resistance until about $1.80. But yeah, we still have some work to do. We're potentially seeing a bull cross of the stochastic, but it's quite a ways away. I would say at least a week or two away. And then in terms of the weekly moving averages, we're still well below all of those. In the daily time frame, we actually just had a bear cross of the 50 and the 100-day moving average, but we're back above those. So we'll see. I wouldn't be surprised if it faded. The whole sector still weak, still, basically drunk off the AYR hangover. And not a good look. And that's probably going to completely cease to exist here soon. And we'll stop trading and everybody will be given the shaft. So I still think there's a little bit of trouble ahead, but hopefully I'm wrong. I was wrong that we were going to see a massive pump today. Obviously, it was a short squeeze on CGC. But yeah, it's still a little bit of a red flag that we came back under that key resistance there, 138, and closed below it. So we'll see what happens here over the next couple of months. Again, look what happened to ACB the last time they had a great earnings report, right? It was absolutely fantastic. They completely surprised, and they came in at positive EPS, not just a big beat and still negative. They came in at positive EPS. The surprise was 11,693%. And they beat in terms of revenue as well by over 10%. And look what happened. Big move up, and then we just faded it down because the whole sector moves together, not down to the day, the second, the minute. But we need a sector-wide catalyst, right? This one okay report, right? I mean, it was still negative, still in the negative, right? It just wasn't like negative $1 US like we saw last time. So it's still terrible, just less terrible than it was before. And still rating the ship very much so. So I think it's going to be probably just one of those short-lived moments, and it will probably fade back down. And again, until we get a sector-wide catalyst, until we see everything start to confirm monthly uptrends, which we're nowhere near doing on CGC at the moment, going to be at least 3 months before that happens. Best case scenario. There's nothing really to like cling on to be confident that the bottom is in yet. So I still think it's going to be very choppy, favoring sideways action and downside action. Versus continuation to the upside. But let me know your thoughts and opinions. I actually didn't get to join the conference call. Let me know your biggest takeaway. from the earnings and from the conference call. Always love hearing from you. It's Rod with Power Group. Thanks again for joining us in the pursuit of wealth. Happy Friday. Hope you have a great weekend ahead, and we'll catch you on the next one.